Good morning, everyone. Welcome to the morning show with RoD. Special guest today, we have Rob from StockTools.app. He is the creator of StockTools.app. First saw this app. I know he was on Max Convexity's channel sharing it. It looked very impressive. But I asked him to join. He was kind enough to get up at the crack of dawn with us. So I just want to say thank you. And Rob, if you want to introduce yourself real quick to the community.
Yeah, sure thing. Happy to be here. Yeah, my name's Rob. I am a self-proclaimed options and crypto trader for a long time now. Been a software engineer for about the past 20 years, and for the last couple of years of my career, I was I was accumulating a bunch of stock options and stuff like that, and I was like, man, what am I going to do with all these stocks? What am I going to do? Like, I'm going to sell calls. So I'm going to retire off these things. So I started, really getting into, selling calls for income pretty much at first. And then that's just led me down the rabbit hole to here we are today, building out StockTools.app with all kinds of interesting options tools.
Awesome. So how long have you been involved with investing? When did you start investing?
I actually started back in 2008 when the great financial collapse happened. I just gotten a job in Silicon Valley, and I remember I was working at NVIDIA, and I was walking around, and their shares and their stock went from like $8 to like $5 at the time. This was insane. And I'm walking around, I'm looking at all these buildings. And I see Intel is like right down the street, and I'm like, there's no way these companies are just going to disappear. And so I just started like buying the bottom, and it was like literally the first time I had an E-Trade account. It cost $14.99, $12.99 to make a single trade. It was like insane.
Yeah.
But that was when I started, and I instantly got hooked to the point where I was like watching level 2, like the actual ask and bids on Yahoo Finance message boards and stuff back then. And I was like, this is too much. And I actually stopped for a while because I was like getting super hyper focused on trading instead of my day job. So I've been peppering it ever since.
So you bought NVIDIA at $8? Is that what you said?
Dude, I was getting shares. I was getting RSUs every quarter. Like, I was a senior web engineer there, so it wasn't just the buying them too. It was actually getting them.
Hopefully you held them.
Not really, but not enough.
Yeah.
Not enough. But
right?
Yeah.
All right. So how did you? Well, let's jump right into the website, because I think
Sure.
Was this website built based on what you were doing in the investment space, or was this website built when the high yield space kind of started?
I started building this just this year, in like May of this year, April and May timeframe. I actually started trading options because of YieldMax a lot more, because I went on a sabbatical. I was at my job for 7 years, and we got like a nice month off thing, and I was on vacation, and I was like looking. I saw some video about YieldMax, and I was like, oh, somebody will just sell calls for me. I don't have to deal with this right now. And so I bought it. I bought some of the NVIDIA, I bought some Apply, and a couple of months went by, and I was like, what am I doing letting these guys do it for me? Like, I'm just going to do this myself. I know how to trade. So then I started getting into it big time. And what this site came out of me really creating. I have like a crazy spreadsheet with all my ideas, and like I would always say, like, all right, if I bought 300 shares of NVIDIA, 200 shares of Google, how much could I make per week? How much? I'm always trying to reverse engineer the replace your income problem. So that's really what this came out of originally. And then I just started building.
So did you buy YieldMax funds and Defiance funds and all that? Did you get involved with that, or did you?
Oh yeah, totally. Yeah, for a while. Yeah.
What are your thoughts as an options trader? What are your thoughts about these funds today, or all the funds? Like them?
I would say I think the funds are good for people who are afraid to trade options themselves. I think they're good for people who don't have enough for 100 shares of these big stocks as well. I think it gives people access to the upside, and gives them access to these. You can buy 100 shares of Costco and start selling calls on it, or even any of these stocks in the Qs or SPY or any of this stuff. So it's definitely a good introduction. I think some are definitely better than others, and I can I can show that as well in the in the app. Is I have a really I made a really hyper detailed dividend ETF comparison tool that actually looks at each dividend versus the underlying and seeing like how does it compare and what's outperforming, what's underperforming, and then even looking at like all the SPY funds together and all the QQQ funds together and seeing like which strategy is actually outperforming. That's really like the coolest thing about all of these funds is you're realizing like, hey, should I be doing should I be doing call spreads? Should I just be selling a daily call? Should I be selling monthly call? Should I be selling put spreads, these lightning spreads? There's like so many different strategies that I've learned just from even watching your channel and trying to micro investigate how I forget his name, but how they're managing Misty and all that stuff. Like we've learned a lot over these last couple of years, just hyper focusing on these guys' trades. These are professional traders making billions of dollars trades, and we've learned a lot. So I think we're just about ready to start doing it ourselves, I think.
Nice. Yeah, exactly. It was kind of the same thing for me because I was trading options. Then these funds came out, and it reminded me how great options are. So, as I'm covering them, I'm like, wait, I want to have my own fun. I want to do it myself more.
Right. Totally.
They're having all the fun. I'm covering their trades. I want to cover my own trades.
Well, that was what got me, honestly, was Defiance and QQQY at the beginning. Is I was like, I was freaking out about the NAV and the payout. Right, the payout was insane at the beginning, and like I was like, oh my god, they're gonna pay me 60 cents every whatever, and every month, and I would just see it go down, and then it was going down, and then it would go down again. And I'm like, wait a second, this isn't right. And so that was like, I was even doing the thing because I was like, we call them high yield tourists, right? The people would come in night before the dividend is ex div date, and they would buy, and then they sell instantly right after. And like, wait a second, that's my dividend. I've been holding this stock the whole time, supplying the funds for them to go and sell these puts and all this stuff. And then you'd come in, capture the dividend, and then disappear. And I'm like sitting there with my NAV down like 5%, and you're like, what is going on? This isn't right. So I was even like selling night before the ex div date to try and like capture the pump up, but not let them take all my, not let them over distribute my funds, kind of thing. I was like, I can figure this out. And I was like, you know what? No more. I can manage my own funds.
Trying to swing trade them, huh?
Yeah, exactly. Yeah, totally.
Nice. All right. So, are you prepared? Do you have the website up, or do you want to?
Yeah, I'm good to go.
Okay. All right. So, for anyone watching, Rob is going to share his website, kind of go through it. If you guys have questions, I'll pull them up live as we go, and we'll go from there. All right. So let's add that to the stage, and I'm going to take our beautiful faces off the screen. I know everyone's going to be mad about that, but
yeah. So really, so this site, we created it really for this tagline right here. It's like, how do we take our portfolios to generate income, right? Like I want to be able to, I really like the idea of like every 100 shares is an apartment in an apartment building that we should be collecting rent on every week, kind of thing. And so so I built a lot of options tools to do it yourself. I've built a lot of dividend tools as well, to also track all of these. Like, actually, we'll jump in right here. So we'll just jump into the dividend one because we were just talking about that, right? So this screen is the idea is like your income strategy detective kit. So the idea is we have let's look at Roundhill weekly payers, right? And so see, we're looking over the last month. We can switch between cash dividends or reinvested. We can add custom tickers into here as well. We're just looking over last month, and we can see, okay, let's sort by ETF return, and we can see TSLW is outperforming Tesla slightly by 1.7%. Google's outperforming, or GOOW is outperforming Google. The other thing I like to do also is you can bring in all of the other funds, right? So we can bring in YieldMax, single stock funds. We can, we can click select all, and it's going to bring in literally all of them. Yeah, I got to drop BRKY. But you can see Carvana versus the underlying. You can see all of these like one versus the other, right? So we can see GOOW is outperforming GOOY, TSLW is outperforming TSLY. That just reminds me, I'm just going to click select all real quick and give it a second. So this is literally bringing in all of these groups, and it's just going to compare them all at the same time, all into one big list of all of these guys. And so you can come here and you can look at all these individual funds. You can add all your custom ones. And actually what I haven't done is you can click in too, and this is going to expand into a deeper dive, right? And so we have a detailed analysis where we're looking at total return. We can actually add the SPY as like a benchmark in there as well. So you can see how we're outperforming, how much we're outperforming SPY over the same time period. This view is just a comparison, really similar to like Dividend Channel. If you've ever gone to dividendchannel.com, where it's like the side-by-side with or without dividends reinvested, and you can quickly see, actually without dividends reinvested, TSLW is doing better, which is interesting. And then an analysis sheet.
So is this, you're comparing just two, right?
Yeah, it's just the two. It's just the one that you clicked on. Like whatever you click on, it just opens up, and it's just a deep dive into that comparison of those two tickers. So TSLW versus the underlying, and then you can see very clearly like how are we doing. And you could do this, we could do this with TSLP versus TSLW, right? That's the other.
Okay, so they're set up that way. So
yeah, I just set it up from a default of like adding the underlying versus the other one. But that's the other thing actually I should be doing is like, actually I do have one in here, curve versus YieldMax head to head. I need to add more head to heads in here. I think we need more battles to see who's the winner kind of thing.
So your website, obviously it does total return. It pulls the distribution as they're announced.
Yeah, exactly. As they're posted.
As they're posted on the website, yeah.
Yeah, well, as they're posted to my data provider, honestly. I'm not going through and looking at the sheets or the stuff that they're posting. But I have a data provider that is giving me all this data, and as soon as it's posted to there, it's posted here instantly. Okay. So yeah, and then you can jump in and kind of do like a little bit of more income analysis here as well, of like seeing like if you did invest X amount, how much would you be earning over time? It's looking at previous history. If you did have that invested, where would you be sitting right now? You'd have plus 19,000 plus 19% shares if you're reinvesting the whole time. And then let's see, yeah, just a breakdown of dividend data and additional info is nothing really exciting. It's just some info there. I'll just stick to
dividends. I'm sorry, if you go back to the top.
Yeah, please.
I just want to see like the very top because I kind of so all right. So you have groups, and then you Bitcoin ETF. All right, so yeah, everything's kind of sectioned off.
Yeah, these are just pre-populated groups that I've created that are just like, if somebody wants to come in and see all the Bitcoin ones, you can see blocks versus IBIT, BTG versus IBIT, etc. You can actually go back pretty far on these too. Like we're just looking at 1 month, but we can go back to a full year. Some of them are going to be red because we have so many new funds right now, so that doesn't have data. But we can see, over last year, BTGD is doing really well, of course, because of gold. We still have TSLP in there, but I can get rid of that. BTCI is doing well. It's outperforming by 5%. So that's actually doing really well. YBTC is also outperforming Bitcoin over the last year. Yeah, we can see their payout.
And then you can also type in, right?
Yeah, exactly. And then you can also type in. This is something I've been trying to figure out as well as like NAV stability, where like can this thing be supported, considering its payouts, right? So these have a declining NAV. There's some of the other funds, like we can switch to all the SPY funds. We can look at.
Maybe if you don't mind, I'll ask the community if they have a certain two funds they want to compare.
Sure. Definitely.
And then we could do that, and then just quickly kind of run through that.
Yeah, no worries. Happy to.
Because we got to show the love for everyone getting up early in the morning.
Definitely. Definitely. I've also, I'll wait for those to come in. In the meantime, I can show off this dividend income calculator one. So this is, the idea is, a lot of this whole website, like I said before, it's all based on like, how do I replace my salary and start generating some income, right? How do we start making some money off this thing? So like, all right, I have a $100,000 a year salary. I need to make $8,000 a month. What can I do? What do I need to do to to get those, payouts. And so I have, a bunch of different groups here just to easily add them, right? So if, you have a YieldMax and you say, I want 25% of that, we can add that to the portfolio. We can add some, we'll go into Neos and we'll say we have some SPY, another 25%, and we have some, there's some granted shares in here. I lost a lot of money on TSYY. I'm not clicking that one. NVYY. And then we'll go pull up an XPay or what was it? MagY. That's a good one. And so that's, now we have 100% allocation. We can see, how many shares we need, what's the yield. Yeah, and also like just a short highlight, like all of my things, I try to add like tooltips and the deep dive, the information to all of this stuff, right? Like a big part of this is like teach a man to fish. Some of these things are most of the data you see is pretty simple calculations. It's not really that hard. It's just kind of big numbers, and it's hard to do on the fly yourself in your own head. So it is a little tricky to do when you're looking at these things. But throughout the app, I'm always trying to add more informative tooltips that are going to break down whatever this number is and how we got there and why it is that way. So even if you do want to use it in your own spreadsheets and things like that, trying to break down all of that. So yeah, so you can see the last payment, the payment type, what's the monthly income going to be, how much is that position going to cost, and then the total of like, okay, if we want to make 100 grand with this portfolio, actually we only need $350,000 position to generate $8,000 a month in yield. But as we both know,
the weighted average yield. Why does YieldMax show 4%? Oh, no, 54%. Sorry, it's a little bit. What is the weighted yield?
It's pulling out the last. It's just using the last one for this one, the last payment. So I think the last payment might have been that high.
Yeah.
Based on the price at 10.54.
No, I mean the weighted average yield on the bottom.
Oh, yeah, the weighted average yield is the average of all of these together.
Oh, because you put more in SPY. All right, that makes sense.
Oh yeah. So that's the other. Actually, I didn't explain that part. So the way this one, and I have another one that's options based as well that does the same thing. The idea is, I want 25% of the income to come from this, not 25% of the 350,000. So it is going to be much more SPY. It's going to, if we swap out SPY for, NBDY or something like that, it's going to, let's do that real quick just so everyone can see.
Yeah.
So we'll switch that out for, we'll just do NBDY, and we'll see. And now that actually goes down to less. I don't know, NBDY. Yeah. NBDY, what the heck happened here?
You hear that? What is that?
It's only 16 cents. Is that bad? It's 4% yield.
Do you hear that noise?
No, I don't.
I guess my
yield's that down.
Making weird noises. Okay, we do have the example if you want to pull up Hui versus HOOW.
Sure thing.
It's the other guy's mic. Is your mic like close to something? Or, I don't know. Something's like rattling.
Rattling? Oh, interesting.
Oh, there you go.
Is that a little better?
That works, yeah.
Okay.
That was weird. All right.
Interesting.
All right, yeah. So HOOY versus HOOW.
Got it.
Thank you, Black Mamba.
Yeah, appreciate that. I just have a bad Logitech camera mic, so all good. So this is over the last 6 months. We can see HOOW is greatly outperforming.
So the default is 6 months?
No, I just clicked 6 months. I had
okay. Yeah, it's at the top. All right.
Yeah, so you can just click whatever, and I can even put it into a date. Oh, actually, I forgot to show off the other two tabs as well. But I have like a section, the buffer report, that like if we had a whole bunch of them in there, it shows the up and down. We'll add one real quick just so you can see. But like kind of showing the positive and the negative, but TSLY is so high up.
Now, question, or maybe even recommendation if it's not there, because some funds launch at different times. How are you able to compare, like if one launched, say, 4 weeks ago or something? Can you compare as of that latest launch, as of the latest launch of between the two? Or
yeah, it'll go back to whatever date is available. Well, it'll try to, right? So like, I don't know when these launch dates are for HOOY, but we could.
Okay, and it'll start it.
Yeah,
it'll start that comparison on that date.
Right.
Okay.
Try to find it. We'll see. We can go back a little further to actual launch date if we can find it around the time frame. Yeah, let's see.
Did you get a lot of snow?
No, it wasn't too bad. It wasn't too bad. We got a little dust, but it's so cold outside. It's going to be an ice skating rink out there. I think.
Yeah.
It's like for a reason out there.
We got like 9 inches. So.
Oh wow.
Delayed opening here.
Wow. Yeah. So it looks like it was around June when Hui launched. So yeah, we can see a deep dive here. We can see the comparison. HOOW is doing much better. Of course, it's a leverage, and Hood has been on a tear, so that makes sense. It's outperforming actually by a good amount, by 30% almost, which is crazy. Yeah, and then looking at a breakdown, return advantage, HOOW is outperforming 28%, over a half a year. We can see the drip benefit. You would have added 2.5 shares versus 7 shares. Or actually, is that minus? Oh, is that plus minus? That's interesting. Yeah, man. Hood. I run covered strangles on Hood myself. I like Hood. Hood's a good stock to sell options on. It's very, very volatile. It pays out very well, and it kind of has been sitting in a range of like 120 to 140, 110 to 140 for the last.
The Friday was, or Thursday or Friday was rough on Hood.
Yeah, back down to 120. It was pretty rough.
All right, so dividend channel. I don't know about everyone else, but
yeah,
that's always who I defaulted to do the comparison, right?
Right.
Obviously, yours does that, and it reflects more. It has more visuals and details behind it, which is good.
Yeah, we're trying to build all this crazy stuff out. trying to build it all out.
Black Mamba's asking, how much is a monthly subscription?
Monthly subscription is $20 a month, and we're doing but the first I didn't even mention that. So 14 days, so you can sign up right now and create an account, and for the first 14 days you'll have full access to all the features to try it out. And then after the 14 days, you go back to a smaller feature set. And then if you do sign up, the first month is free as well, so you won't get charged for. Technically, you could write it out for 14 days, then sign up for another month. Sign up for a month for the subscription, and you would get 6 weeks of free before you finally get charged $20. So.
Okay. What's the name of the website? It's StockTools.app. I did pin Rod L. I did pin a link to the top of the live comments, and after the live stream, I'll pin it to the top of the comments as well. My affiliate link, because Rob was nice enough to make me a nice, sweet affiliate link.
Appreciate it. Appreciate you, Rod.
Are you able? Brother asked twice, so I figured we'll pull up one more. Alt-I, which is obviously a newer fund.
Sure.
Alt-I, and then we can dive into the options or the other.
Sure thing. Alt-I versus Alt-I. Let's see. Alt-I is pretty new, so it's probably only like 1 or 2 months. For the 1 month, Alt-I is winning. Let's see if I can go back to the launch date.
Alt-I. I hate saying that. Alt-I. They're both Alt-I versus Alt-I.
Right.
Can't believe they made a ticker so close to it.
The launch date is. Let's see. Yeah, I don't know when Alt-I came out. We'll just do last month. So Alt-I is winning. it is outperforming slightly by a couple percent. Not bad. SPY's winning. SPY's beating both of them right now. That's the other thing. I like having the SPY benchmark in there, right? Because if you're not beating SPY, what are you doing? You're wasting your time, kind of thing. Just buy VOO and chill. So yeah, you can look and see with dividends reinvested, start price to share, end price to share, starting shares, ending shares. So you would increase by 34 shares here, 12 shares,
And this has the reverse split information already baked in.
Yep. Yeah, it's doing the math for that already.
Okay.
Yeah, totally. So we can see Altai is the winner over the last month. Doing really well. I haven't dove into Altai yet. How are the holdings and all that? Are they doing?
To be honest, I haven't really dove into it.
Space, Galaxy Digital, Rare Earth, Solar Edge. These are interesting. These are some crazy tickers. Riot.
Yeah.
These are all high yielders for sure.
Yeah, and then Ulti's stepping back a little, getting the safer plays now.
Right, they're trying to get they're sick of getting yelled at by everybody. So
yeah, yeah. They're like, what now? Yeah,
yeah. Cool. I did want to jump into. I just want to show off one thing about the dividend income thing is that I did spend some time to try and do some estimates as well for like pay schedules and trying to figure out what your projected payments are going to be. So it actually does it looks back at the last 4 payments and then tries to estimate what are the future payments going to be, and if you did have that amount. And so you can see we have high confidence for when these payments are going to come out, that this will be around those amounts, hopefully.
So what is this though? Is this your watch list or your holdings?
This is just this dividend income. Right. Sorry, I switched back quickly there. This is if you do come in and create your dividend income portfolio, and then you want to look at what is my estimate schedule going to be over the next couple of months, and where can I maybe could I estimate of a projected yield over time.
Based on the prior 4 weeks or 4 months?
4 weeks, just 4 weeks. Okay. Nothing. Yeah.
All right, and so it's always the latest 4 weeks.
Right. Yeah. Right. Exactly. And then this estimate, if you ever use there's a market watch tool that kind of does this, where you're hey, if let's say and then I need to take out $5,000 a month and forecast over 10 years. You're okay, you'd be getting this dividend reinvested, and try to figure out what would your portfolio look like over time if you were this one's showing the 40% reinvested, so you're withdrawing $5,000 a month. How many extra shares would you have? What's your income overall? Some crazy numbers always. Whenever you do this now with any of this income dividend stuff, it's all right, I guess I'm going to be a trillionaire in 5 years.
Is there a way to add maybe past performance, because obviously
yes,
when you do total return, it just assumes flat capital,
goes down. No NAV decay. It's going to hold it the whole time, right? Yeah, that's the other part. You need a -5% per year in there, or something like that. And then similarly, they're just trying to show a breakdown of here's the annual dividend, here's the cash paid out, reinvested, yield on cost, all that stuff. And similarly, just trying to explain all of these different calculations and breakdowns, and and then calendar mode as well, so you can see.
Oh, look at that.
When all your payouts are coming, and more.
Now, question on this dividend calendar: is this available just to see all of the funds you have in the website, just to see when?
Yeah, I do have that as well. I have a whole dividend calendar right here, where you can come in and you can pick from these different groups, and you can add. You even I actually didn't talk about that. You can make your own watch list in here as well, and so you could have your own watch list and your own tickers and all that. But here I have a bunch of pre-populated groups where all right, whether monthly dividend payers Stag or Main or O and all these.
Oh, you even got those. You got.
Yeah, we got everything. So that's the greatest thing about my data provider is I do have all of these available, and we can
all of the dividend paying stocks.
Yeah, I would say 99% of them.
Even Nvidia with the 1 penny.
what is it? What is it called? Nvidia? I don't know that one.
No, Nvidia.
Oh, yeah, totally. Yeah. Bam.
They are still paying that penny, right?
They're paying that penny. They're keeping everyone honest.
All right.
But yeah,
Nice.
it does show, and like you can jump between, you know, ex div date or record date
Monthly
too as
income,
well.
$5. Sweet.
Yeah, a big spender. Yeah, let's see. Yeah, and so you can come in and see all the dividend, the normal dividend stuff there as well. And actually, this one I have to I have to work on myself. So this eventually will be a dividend capture strategy, right? So the idea is, you know, like let's say, you know, not for Nvidia, but like what's another stock that actually does pay and has a cat. Cat is one I've wheeled in the past to try and earn the dividend on. And so Cat is paying out, you know, $1.50. It is like a $200 or $300 stock, but it's paying out $1.50.
Yeah.
The idea is you sell a put, you know, the week before ex div date. So you come here, you try to figure out, okay, when ex div date is coming up, you know, on January 19th. So I need to sell a put that's going to expire the week before to try and get assigned those shares. So you're holding those shares over that ex div date. As soon as you get assigned those shares, you turn around and you sell a call right away, you know, at the money or slightly in the money, or, you know, slightly out of the money, depending on how bullish or bearish you are, for the following week, to try and get, you know, trying to get, you know, this triple or quadruple income idea, right? So you're capturing you're getting paid to buy the shares from selling the put. You're getting paid to on the ex dividend date. You're getting paid on the shares. And then depending on where you put the call, you get paid on the call as well, right? So you're selling the call for, you know, either at the money or a little bit above or even in the money, and you'll get the extrinsic in the call. But if you do it a little bit out of the money, you also get some price improvement as well.
Yeah.
So I need to put it together, a calculator for that, so you can just drop in whatever ticker you want and figure out, okay, I need to sell this put and I need to then sell this call the following week and all that good stuff. But yeah, that's a good transition over into the option side. So, you know, I like the dividend stocks. I definitely have some in an IRA that I have, but I very much like to do this stuff myself. I prefer to take matters into my own hands, I guess. So like, as I said before, with like the QQQY situation, it's like, all right, you know, Jay's a great guy, but I'd rather manage my own NAV and keep all the contract premium for myself, instead of, you know, guessing, are they holding it back? Are they overpaying? Like, how does this work? And those scenarios. So I prefer to come and, you know, build these things myself. The first thing I built was, you know, almost this like cockpit for options trading, where I want to see all of the things that are important, right? So what's the IV looking like for these stocks? What's the open interest, the volume, you know, the volatility smile, or bearish?
Can we pull up Hood, since we talked about Hood earlier?
Please. Yeah,
I do trade that one as well.
Yeah, that's a good one.
Okay, good.
Great.
Thank you.
114% IV. Definitely great.
Damn. Is that
an
average of some period, or that?
It's actually the current expiration date. So this everything is on the current expiration date. So if we switch to like the monthly, the January 16th, it's going to be a little less IV. We're at 90%, and it's super put. The put skew is really high. Put skew is really, really high. 150% on the put side, but 25% on the call side. So it's very interesting.
That's pretty cool to have, because I never really did look at that. I know people talk about that, right? So obviously, there's more interest on the put side than the call side. But for this week, it was kind of even.
Yeah, it's interesting. Actually, what are all these options doing down here? What are all these people doing down here in the 40s and 50s? There's a lot of action down there. A lot more action than I was expecting when I opened up the strikes there. So yeah, so these are a couple of panels. So Gex, I don't know if any guys are familiar with Gex.
Can we go up?
Oh yeah,
sure. Kind of skim through this. I want to see all this. I want to see all the good stuff. So all right. So the top, you have the current price. You got the range, which range?
The price range.
Daily?
I don't know if that's right, actually, because it moved a lot more than that on Friday.
Yeah.
It was
pretty active after hours, or
it might be last 24 hours or something. It's like pre-market.
Previous open. Okay. Then you have the IV. That's based on obviously the expiration date. that you mentioned. Volume ratio, that'll show if it's okay.
Yeah, this is the ratio of put volume to call volume, right?
To the left, right? That ratio.
Yeah, and
what we're
like
seeing to the left.
It's a little hard to see. There's like a little line here showing that it's at 1.65 or it's bearish, where there's a lot more volume on the puts than the calls.
Is that for that expiration though, or is that for? Okay.
Yep. Yeah, everything is for the current expiration.
What is can you pull up this Friday's expiration again? I just want to see.
Yeah, sure thing.
Only because I have a call expiring Friday.
Definitely.
All right. So
super bearish
as well.
Charts, actually. I gotta adjust this to make it dynamic, so it actually goes all the way up to 2.36.
Yeah.
It went all the way off the charts. It's over here.
Oh, geez, great.
Interesting.
Wow.
I'm not too worried myself. I buy puts as well, so we'll get into that. I have a whole section called my Theta Fortress calculator, where I like to buy an in the money put for every 100 shares, and then I'll sell covered strangles around that, kind of married put position. And so the worst case, if it does go down and I do end up getting assigned the short put side, I still have some hedge in there that's hedging my shares and giving me, I start at 55 delta, but as it goes down, the deltas go up, so you do have some protection there.
Yeah. Okay. All right. Sorry. Let's continue. So you have the open interest. That's good.
Oh, yeah, sorry.
OI ratio, IV skew, call. All right. Okay. Sorry. You can go back to the GX levels.
Yeah. No worries. Yeah. GEX levels is like how much open interest there are at each level, right? And so usually there's this max pain level. Max pain analysis is 125, and I'm selling a straddle at that point. Right, I have a short call and short put right at 125 right now. So we'll see how that goes this week.
All right. So define max pain.
Yeah. So max pain is the strike where, like, if it's under that price or over that price, it's like going to cause the most pain for all of the holders of those options, right? So it's like the market makers don't want to pay out on those contracts, kind of thing. So we're trying to figure out.
They're betting. Most of the market is betting that it'll end up around that price range for this Friday.
Yeah, pretty much. Or like it's the place where the market makers would put it to make sure that they have to pay out the least amount of money. I think it's like the kind of way I look at it. But
why is the 130 bar higher? Wouldn't that be max pain if it's higher? Or
well, I think it's taking into account the puts as well. So that one has higher calls at the 130.
I gotcha.
I think, and so if it went all the way to 130, they'd also have to pay this out, and they'd pay out the 126 and the 127 and the 128 and the 129, right? So it's like trying to find the right balance there.
Okay, so if I sell a covered call this week, 125 would be a good range. I mean, not financial advice, all that, but
sure, yeah,
that's kind of like I know it's close. It's not far out of the money, but
right.
It would be worth the bet. Maybe is the right term. I don't know.
Yeah, I think so. At 120. I would probably sell the 130 right now. I mean, I don't know. We'll see. Actually, let's look at the actual chain itself. So
I have a 137. So I'm wimping out right now.
Oh, you're safe down here. We got 42 cents left on this guy. So in the actual options chain table here, I wanted to break out the important fields that are relevant to, an option seller, right? So we have what's the strike, what's the last price, the intrinsic and the extrinsic, right? And having it clearly defined here. What's the intrinsic? Because that's what we're trying to make every week, is trying to sell this premium in the blue bar. And then I tried to make it like a little bit shaded so you can see like, hey, where's the main meat on the bone kind of thing.
Is this live?
Yeah, this is real data. Yeah, I mean, the market's not open, so the options, contract, the options pricing is probably a little off. But
if we were open, this would be like moving.
Yep. Yeah, this would be live. Yeah, totally. Awesome. And so so you can come in, you can see the extrinsic. You can see, if you were to sell this every week, you'd see what the yield collected, and then I break that out, in the imaginary world where this works every single week.
Yield collected. Look at that. I like that. Yield collected.
Yeah.
Annualized, sucker.
Yeah.
All right.
I love hopes and dreams of if I could just do this every week, every perfect. Um,
Hey, sell out the money, you'll be rich.
yeah, and same thing from the put side too, right? Let's say we want to
Yeah.
sell the 30 delta put. We can come in, we'll see, okay, we get $1.50, that'd be 1.3% per week. We'd be making 85% almost a year just from selling puts.
That yield collected, I'm telling you, that's a good, because a lot of people, they always shoot for a certain yield.
Right.
And I've never
Yeah.
seen that, right? I don't think the brokerages offer it, at least any of them that I've seen, right? So
Yeah, I personally I try to do 1% myself whenever I'm selling puts and calls, and it's more like it's almost just like a mental math trick for me, right? So for everyone out there, a little trick is like 1% of $110 is $1.10, right? So it's like
yeah.
whatever the strike price is, you're just trying to match like I'm trying to get the extrinsic amount of the same price of the strike, pretty much over like is like I'm just trying to match that always of like whatever the strike is. I'm like, all right, that's good. I'm comfortable there, kind of thing at a minimum. Um, so yeah, so that's the options chain. I could go. So I have an option screener. So let's say you want to do that fast across a whole bunch of stocks. You can come in here for the whole QQQ, and we can just search for covered calls, puts, call credit spreads, put credit spreads, call debit spreads, put debit spreads. We can change the expiration. We can look for this week. We could look for 60 days from now. We can change delta. We can look for all the 60. We'll look for the 60 DTE. We can even filter out for like the minimum yield as well. And if
Where's the RoD?
what's that? The RoD
The RoD
the
button.
RoD
Yeah.
the RoD button. I gotta add that.
Yeah.
We'll get all those TNAs and everything in there. We'll get all your big ones. So yeah, so man, that was fast actually. So that surprised me how fast that was. But so yeah, so I just searched. I was able to find all the around 60 DTE, 20 delta, covered call.
So can you go
Yeah,
to the search again?
yeah, sure thing.
All right, so you did covered calls. All right, so you're just kind of searching opportunities in a sense.
Exactly. Yeah, and let's say you have I only have $10,000, so I only want to do stocks under
How do you
$10.
even do this? What does this connect to?
It connects to there's this big this site massive where they have
Oh, okay.
it's honestly guys, it's very expensive, and I greatly appreciate any subscriptions.
Yeah. We got to keep this afloat.
I am losing money on this every month.
Yeah.
But it's like my labor of love. I'm a CTO of a small startup on the side. This was my side project kind of thing of like nights and weekends of building this out. Speaking of which, I'm just going to get this thing started because it takes a couple of minutes, but don't bear with me. So yeah, so you can come in here, you can search, really quickly against all of the different strategies, and we can come in, we can find put credit spreads really quickly, and we have nice, configurations where it's finding, five wide. You can change your spread width, you can target deltas where you're starting from, all that good stuff. Only
Wow.
select by IV. Same thing here. We can mouse over and see like all these different informations of all of these fields and all that good stuff, man. Yeah, I've been building this for a while. There's a whole bunch of cool stuff in here. I use this every day to put trades on and to find new trades.
Do you take suggestions? Is there a way for
Yes,
people to
very
type in a
much.
website to suggest?
Yeah, please. I'm very happy to build anything that anybody wants that they can think of. Um, I'm selfishly building. I've been building this for myself. This is all stuff that I want. When I'm like building all these things, I'm like, what do I want to build? Like these are all things that I've had in my spreadsheets where I'm going into option strat and I'm copying over, the contract price, and if I sold this call every day, how much would I make over the year, and what's the premium yield, and all that good stuff. So yeah, the option screener is super powerful. What I just kicked off over here was the options backtester. So I think I have, not to toot my own horn, but I'm pretty sure I have the world's first wheel strategy backtester that I've created, right? So the idea is, I can sell covered calls, or you can backtest covered calls or covered puts or cash secured puts. We can go back to certain dates. You can pick any ticker you want in here as well. So this my data source is actually super powerful, and they have something called flat files where you can go back in time. And if I go to these day aggregates, they have like every options contract price for every day of the week. and if I open one of these up, it's going to be like 300,000 rows of a spreadsheet with every single options contract for every expiration and what was their open, high, low, close. And so I'm literally going through and downloading those zip files, unzipping them, reading them, trying to find, the Apple contracts that are relevant for this time period, caching those, and then I run the strategy against those contracts over this time period, right? So you can switch between, income focused, and it's really just picking which delta, right? Do you want at the money, in the money? How far out do you want the put side to be when you're starting the wheel? And then how far out do you want the call side to be when you're, once you're finally assigned, right? And so I did that because, as an options, as an actual wheeler, I sell puts more aggressively, and then I sell calls like further out of the money. You're trying to get that, income back. You're trying to get that price improvement once you do get assigned. Usually, some people like to just, sell at the money instantly and just get all that premium. But and you have that option. And saying, take profit. I built in take profit. How many days to expiration do you want to be selling? Do you want to sell 30 days? Do you want to sell this or that? And then a breakdown here of like what was the actual performance, over that time period, right? So over this, last 3-month period, if you were to wheel Apple, you would have made, 114. If you did execute this strategy using those rules, you would have made 14%. Breaking down all of the standard things that you would see, all the standard metrics around performance.
What were the rules you put? Did you plug that in the top?
Take profit 50%, 7 DTE.
Okay.
At the money puts and 3% calls. And so so if you see here, you can see like we're selling puts, and then we get assigned the put, and now we're wheeling. So now you can see like the portfolio, the strategy portfolio is flat.
You even have a visual. Look at that.
Yeah, it's pretty sick, man.
It's impressive.
I've spent a lot of time on this. I got really like hyper focused on this for like 2 weeks, and was just really trying to make this cool. So so we get assigned our put, and now we switch to our call, right? So then now we're calling. We finally got assigned our call here. You can see price went up, and now we're selling puts for these whole couple of weeks, and we're selling more and more puts, and then we finally get assigned on this drop, and then and now we're riding stock price, or now we're riding share price up with everyone else, and then we get assigned again, and then we start selling puts, so we're flat until we get assigned again, and then we're back to wheeling.
Here's a question.
Yeah, please.
Sorry to interrupt.
No, go for it.
Any plans for a teaching component for new traders?
Yeah, I should. I should do that.
Education tab or whatnot.
Yeah, I have that like on a little bit. I have like a covered call calculator section that's similar, that has like an options education section. I need to do more around that.
You just put my whiteboard videos on there.
Yeah, exactly. That's what I'm like. You just need the link out of like, here, go watch these videos. Go watch this Taste and Trade, Mike and his whiteboard video or whatever.
Yeah.
And so this is just a breakdown of the trade history of what happened, right? So going through, you can see we were assigned, and then we had 4 shares, and then we can actually click into this and see all the details. I want to see one that actually had a couple. Sorry, one. Yeah. So here we can see like the whole flow here, where we finally were able to collect all $22 of premium over time of the trade life cycle. Yeah, it's pretty cool, man. It's been fun building all this stuff. This is my baby, my nights and weekends. Let's see what else.
I have a question.
Yeah, please.
I don't know if you've been watching some of my latest content, but one of the things we do is we start a position like a synthetic long, kind of like YieldMax. So let's say let's pull up ELF for fun. That's one I've been playing around with, ELF. Would you be able to tell us if we opened a synthetic long, let's say with a December expiration date, by looking at your data, would it tell you, I don't know, like how it looks,
So I've actually built a whole poor man's covered call calculator just for those scenarios, and I do have a way to switch between what do you want the long side to be? Do you want it to be just a long, 80 delta put, or do you want it to be 80 delta call, or do you want it to be like a zebra where you sell or you buy 270 calls and then sell the 40 to get that 100 delta, balance, or do you want the synthetic long where you're buying the call and selling the put, right? And so
yeah, so I actually I do that plus I buy a put.
okay,
but we won't
awesome.
get into that. We'll talk about that.
Yeah, sure. Yeah,
But,
that's smart though. That's what you should be doing. It's hard. It's risky, man. These stocks are crazy, especially if you're dealing with ELF. ELF's pretty volatile. So yeah, so this will go through and try to find, based on whatever you set in here for your leap, minimum days to expiration.
So there's a recommended leap. What is that based on?
It's just based on what that's based on me. Honestly, that's my recommendation is like 300 days or more if you're going to be buying a leap kind of thing. That's Rob's recommendation, guaranteed, approved. Not financial advice. Or
your money back.
So yeah, so this will go through and then try to find, okay, you want to buy the 75 call, 75 put for, January 15th, 2027. Here's the delta. Here's your theta per day. This is what you're losing per day, the intrinsic, the extrinsic, and then a breakdown of, what's, pretty much a deeper dive into those Greeks. It's going to cost you $435 up front. Actually, I need to add the margin in here too, because there is margin for the short put side.
This is for one where'd you put the contracts?
I just clicked this one. It's just this one that's selected here. So
it's just one contracts?
It's just one. Okay. Yeah, it's just one. Right. Yeah, that's actually something I need to do to this one to add quantity in there.
All right. And then, so that's the price of the contract. You said the 435, right?
Yeah. Yeah. And actually, let's see, does it show it in here?
So there's a January 15th and then the
2027, 57 weeks away. Okay. And then we can look at, actually, these are 0. That's interesting. I wonder if it's just because it's so far out or if it's because it's ELF. I put together like a visualization here as well. It kind of looks, it's hard to see because it's doing this long expiry on here. So it's like hard to tell. And then when I do it deeper, it's all jumbled together in here, but I need to make that look a little better. And then on the same side, when you're trying to find this is actually the weekly premium targets, right? So do you want to cover the extrinsic only or the full recovery, right? So it's like usually when you're buying a leap, you're just trying to cover the extrinsic, what's decaying over time. You're expecting hopefully that stock is going to go up and it's not going to go underneath your leap's strike price. So these are just some options of like, hey, if you need to cover, like how much do you need to make per week in premium to cover your theta decay in your long side of your poor man's covered call, right? So if you were making $6 a week, you'll be fine. You're going to make 75% over the life of the option. So you have like a year of making $7 a week, you'll make $160, which is 75% of the overall extrinsic only, right? So it's just covering the extrinsic. And then it'll also find some short call options for you to select down here too as well. And so you can go through and then same thing, like, so from and then I do have some educational stuff down here as well, like trying to explain, here's your management scenarios. When the short call is a challenge, roll the short call out and up to a higher strike and further expiration, collect additional credit. When feeling anxious, close the entire trade, buy back the short call, sell the leap simultaneously, look for better entries. Leap expiration management, never hold leaps all the way to expiration. Theta decay accelerates significantly in the final 60 to 90 days, all that stuff. Like continuously monitor deltas, right? Like if your short deltas will get higher than your long deltas really fast in these poor man's covered calls. So you definitely have to watch that. So have some of these best practices in here, trying to help traders, as this is definitely the riskiest position, I think, of all the wheeling and all the option selling. You can get into trouble. I know we've been yapping for almost an hour already, so I'm going to fly through a couple of these if you don't mind. This is a AI stock screener, right? So the idea is I'm sending over all the fundamental analysis, like all of their earnings and all the quarterly filings and all that stuff into ChatGPT. And then I'm also sending over the technical analysis, like their EMAs, their RSI, stuff like that. And then I let you select, what's your balance, what do you care about, and then we come up with a score for all of these tickers, right? And so as it's going through right now, it's individually screening each one of these tickers all in this in this list, and it's, you know, scoring them, and then it's going to rank them all, and then it's actually going to give you like a nice breakdown of the analysis of like overall scores weighted and profitability and RSI and the momentum indicators and the trend. So yeah, you can come in and it'll actually select a contract and like, hey, if you wanted to sell this contract or that contract, or trying to pick one, and then, you know, in here you can switch between calls and puts as well. But this is like an interesting way to do some like high level AI screening of stocks, and will take into account, you know, the revenue and balance sheets and cash flow and valuation and all that good stuff.
Wow, you got a lot.
Yeah, dude, I've been doing this for a while. This is
a multi video.
Yeah, I think so.
Kind of thing.
So like, yeah, so like looking at this is my rolling engine real quick. So I selected like a contract expiring this week that's in the money, and I, you know, set the price that I'm losing $2 on it. So I'm like, what do I do? What do I do with this contract right now, right? So I'm down $2. There's $200 of extrinsic left on it. I'm earning $31.
Too?
This is all live. Yeah, this is all live too. And
so if I'm looking at this Friday at 3 p.m., I can see how much extrinsic I have left.
Yep.
Minute by minute.
Yeah, wow. Exactly. Yeah. I mean, you have to refresh, but it's not like pushing the data in. But yeah, every time you would look at this. And then so what I'm doing here is I'm looking at all the individual Greeks and trying to see like what's high risk, critical high, where it's 0.62 delta with only 4 days left. Rolling now prevents likely assignment and massive gamma risk. You know, going through the theta per day, we're burning 18% in theta decay every day. So that's actually pretty good. Excellent burn rate despite low, you know, strong position, and going through days to expiration and your current price, and near the money, in the money. Assignment risk is moderate, high gamma sensitivity, low intrinsic value, moderately in the money, assignment risk. And so what I'm doing here is then based on that, it's a little bit out of order, but like based on that, I have rolling engine ideas for like a defensive escape is like, all right, I'm in the money, I need to roll up and out. And so, okay, it's going to select this one. Or if I switch to harvest crush, it's going to try and just
these actual terms that people use, or
no, I made these up. These are me trying to like brand my website, like
okay, I gotcha. Like kind of like how I make up crap too. I get
it. Yeah, I'm like, and then my fortress wall is like an in the money call where it's a very high a high IV stock. And so yeah, so then it's picking this recommended contract, and then it's saying, okay, based on the recommended, you know, the current delta versus the target delta, and your current theta versus, you know, versus the new one, it says, you know, should you hold or should you roll, kind of thing. And then yeah, and then breaking down, like if you were to select this contract, you would it would cost you $392 to close. Your new premium would be $635. You'd be getting, you know, $242 in credit. You're extending your time 14 days. You're getting back a couple of deltas, and you're increasing to $14 a day, or it's actually not increasing, it's decreasing from $31 to $14, but you'll be earning $14 a day, and your break-even price is higher now. It's at 181. So yeah, it's been fun, man. And you can change this here if you want to change the weekly, and you can change your max delta and say, I only want to sell a 30 delta. And so now that just might have changed. Yeah, it changed like the 210 call, and it actually went all the way out 95 days as well. So yeah, man, it's it's been cool building all this stuff. This is all, it's all for me, and I would hope you guys will like it and try it out. This is like a deeper GEX tool that I made that's going across all expirations. So the one we were looking at before in the advanced options chain was just the single expiration. And so I actually just made this week where it's looking across every single expiration and then aggregating them. But you can also do different weighting where it's time weighted, where I'll look at like the closer 60 to 90 days, a little bit heavier than the further out ones, because those just have more gamma. Or single expiration, if we just want to do the same thing similar to the advanced options chain, or like looking at just a range as well. Like I just want to look at 0 to 90 and then analyze, you know, stuff like that, and just trying to find some GEX. Income goals is, yeah,
portfolio. Sorry, what is that portfolio? I don't, did you cover that?
No, this is work in progress for sure. But this is, oh man, I think I have sorry, bear with me one moment. I have a bug. It's buggy. Portfolio is buggy.
Okay.
That's why I haven't talked about it yet.
All right. Yeah.
But the idea is similarly here. You can find all your contracts. You can see you can manage all of your stuff here. So I'm working on, there's a company called SnapTrade that is like, if you guys ever use Plaid to connect to your, your finance accounts and like Robinhood or whoever and other things. There's one called SnapTrade that will do that, and I can pull all your trades, and I can also place trades as well. So I'm working through that right now.
Place trades on your website through your brokerage?
Yeah. That's eventually like the end goal would be.
Wow.
That's what I'm hoping for.
Now you're getting big time here, right?
Yeah. Yeah, that's what I want, is be able to hit, one of these tabs and be like, okay, now sell it. Go sell this call, Go do it. Go do the thing. Or, you're in the rolling engine and you're like, do you want to place this trade? Do you want to roll right now? Things like that. Really quickly, there's like, this one is, a similar income tool where, we're saying I want to make, $50,000 a year. Okay, it's going through Google. It's figuring out, okay, what is the, actually based on the conservative, moderate, or aggressive, it's going to target 35 delta. If I go to conservative, it's going to target 20 delta options. I did monthly income target. My bad. We'll do 5,000 a month with a 1,000 withdrawal. So it's going in. It's trying to find 20 delta options. Right now, this is looking at the monthly cadence. So it's trying to find monthly contracts. We can switch this to weekly, and now it's finding a weekly contract. So it would take you about 320K to make five grand a month in call premium. And the concept is just basic buy right strategy of buying 100 shares and selling a call against it. And so buying the 100 shares, selling the 320 strike, it's a 311. You would need $93,000 of collateral. If you were assigned, you'd be making a $3,000 profit. So the green is the premium collected, and then also thinking about the assignment price, and then similarly like up and to the right for the next 5 years. What else? So it's like coverage strangle calculator is pretty cool too. So it's like same thing, similar to the other ones, where we'll go into hood and we'll look here. The idea is coming in and trying to find these trades for you pretty much, and trying to estimate, okay, if I did put a coverage strangle on hood, I'd make $400 a week, about 3.6%. The profitability is just like where you're at in the range right now. It tells you what strikes to sell. We can switch between the weekly and the 30-day and the 60-day. Try to figure that out. And then same, it'll pull in, here's your weekly 30-60, weekly 30-60 for the puts as well. And then like trying to show all this data as well of like, what was the income you generate from each leg. This is like the put leg and the call leg. All that stuff, man. Yeah, it's data for days, dude. There's so much analysis.
We're above the hour. Is there anything else you wanted to show or tell people? And don't worry, I'm going to have you back on.
Oh, cool, man. Appreciate it.
So
yeah, definitely.
Probably more than once. Because
I would say that the stock screener, this thing is the coolest thing, I think. So it's under here, under the dashboard, under stock screener. And the idea here is I'm trying to find momentum, right? So like, I don't know, I had this option screener and I was trying to figure out how to not just, rank them by all this stuff. I want to look at the technical indicator. I want to look at the RSI, the MACD, the EMAs, the momentum, and then come up with the momentum score here. So I'll get this going. It'll take a second, but so trying to put all of these metrics together to try and come up with a score. And then also on this side, I'm pulling in the options information as well, so you can just see it on the fly. So like we're going through all the stocks in the QQQ right now. We're going through all 100, and then we're going to be able to rank them by their momentum, and then pull in contracts on the fly. So Lulu surprisingly is doing well. I thought they were doing really bad, but like
Lulu is the strongest buy.
Right now in the whole queues right now. Based on its momentum, based on RSI super high at 74, MACD is high, the EMA, the 10 is over the 20, and it's also over the 50 EMAs. So I'm looking at all of these things and all the direction, it's going, and then trying to pull in some quick hits for what's the IV, what's the put call ratio, and then what are some strikes you could sell. I even have the ability to change that delta criteria too for the options that it shows. So if you want to see, like, I want to see just all the, can you rank all the stocks in the QQQ and then show me all the 20 delta, you know, options for them. So yeah, man, it's this has been fun. It's been fun building all this stuff.
Oh yeah, it's amazing.
Thanks, man. Oh yeah, and dark mode too. I should have probably done dark mode. So if you guys don't like bright dark mode,
sweet.
I had to wake myself up.
All right, no, I'm definitely. If you want to come back, I want to maybe early next year we could do some type of series covering individual sections or what your website does. And then selfishly, I'm going to ask you if you want to come on my options when I talk about my options trade strategy and how your website could show benefit to that, which we'll talk offline on that. But I have ideas. So no, I appreciate it. But yeah, for those listening live or after, the website is StockTools.app. I think I pinned.
Yeah, StockTools.app/RoD. Any spelling, we'll give RoD a referral, which is greatly appreciated for him as well, and all his hard work putting out thousands and thousands of hours of content for us to stream in 1.5x as we're going through our day.
Yeah. So I'll pin that link to the top of the comments for those of you interested in signing up for Rob's website. If you want more, don't worry. We'll have him on again. You know, there's a lot to cover here, and I apologize.
No, I can just talk about one section for an hour, so it's all good, man. All good.
Yeah. So I'm gonna put our ugly faces back on the screen, and then we'll just I just want to thank you again for showing that. That was, I mean, I don't even know, there's no words. It's beyond impressive at this point.
Oh, thanks, dude.
So I plan on using it for my options, because obviously I've been working. I'm limited. I'm not a programmer. I'm limited to my spreadsheet skills.
Yeah.
And obviously what I could find through the brokerage, but obviously I think I could tie into how I trade using your website. So I plan on doing that. I'm not just saying that, but I haven't seen, although I have never really went to any other options website tools, to be honest, but this has like almost everything from what I could tell.
Yeah, that's what, as soon as I come up with an idea or something, you know, I'm like, all right, I'm just going to add this thing. We'll go talk to Claude for a little bit. We'll figure it out. We'll add it on.
If anyone wants to reach out to you, either with questions on the website or just reach out to you in general, what's the best way to find you?
Yeah, on Twitter, that's my @ right there, is @RoboTools, my Twitter. So yeah, I think Twitter is probably the best.
Okay.
I'm sure all these guys are on Twitter have it, or if like support @StockTools.app is also me. So I'll reply to those emails as well.
Okay, cool. So yeah, if anyone has suggestions or questions, obviously, yeah, we didn't cover probably nearly enough of what we needed to, but we'll plan something in the future. If you guys have suggestions on what to cover first, I'm selfishly going to say options tools, but because you don't see that stuff available. But yeah, so I'm gonna start to make some closing comments. As always, this is not financial advice. I am not a financial advisor. Rob is not a financial advisor, although he's a computer genius. And this video was for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. But like I said, there's going to be more, like a series maybe for early next year on this. So I think, I don't know if you know about the keyword, but obviously at the end of the video, I'll let you think of a keyword in the meantime. So for the people that made it this far in the video and they want to prove it, they have to type that down below. So Rob, I don't know, do you have a keyword for the community?
Instantly, I just thought run fat ass run, but I'm going to say premium. Premium.
I don't know, run fat ass run was pretty good. All right. I guess we'll go with premium or run fat ass run. Right. So So no, I appreciate you being here.
No, same.
Waking up at the crack of dawn. It was a good time. A lot of this is I'm surprised, much more than I would have thought.
Oh, cool, man.
A website, because I saw Max's video, but and I didn't really navigate because I wanted to be surprised, and yeah, impressive to say the least. So yeah, shout out to Rob and his website. Go check it out for real. I think you said you have a 14-day trial, and then of course there's the promo link, affiliate link if you want to help poor Rod out, right?
Yeah, but, even for that 14 days as well as no credit card. You don't have to sign up through Stripe or anything. You just make an account and you'll get everything for 14 days. So try it out.
Awesome. All right. So on that note, we will end it there. Thank you, Rob, for being here. If you want to hang on, and thank you all for watching. Later.